The global financial landscape is shifting rapidly. The US, China, and Russia are at the center of a complex economic and geopolitical struggle that affects the entire world. From de-dollarization to energy wars, economic sanctions to trade realignments, today we'll break down how these forces are reshaping the global economy. For decades, the US dollar has been the backbone of global trade and finance. The US benefits from its reserve currency status, which allows it to print money, run large deficits, and enforce economic influence through sanctions. But cracks are forming. Massive debt and inflation. The US national debt has surpassed $34 trillion, and rising interest rates are making it harder to sustain. Inflation remains a concern, forcing the Federal Reserve into a balancing act between rate hikes and economic growth. Additionally, government spending on social programs, defense, and infrastructure is increasing pressure on the national budget, making future fiscal sustainability a growing concern. De-dollarization movement. Countries like China, Russia, and even allies like Saudi Arabia are reducing reliance on the dollar. The BRICS bloc is pushing for alternatives, with trade settlements increasingly conducted in yuan and rubles. Central banks worldwide are diversifying their reserves, purchasing gold at record levels to hedge against dollar volatility and geopolitical risks. Economic slowdown risks. While the US economy remains resilient, higher borrowing costs, bank failures, and a declining manufacturing base present serious challenges. The tech sector, long a driver of growth, faces layoffs and reduced venture capital funding, signaling potential headwinds for the innovation economy. China is making aggressive moves to reshape global finance while managing serious internal economic issues. Yuan internationalization. China is promoting the yuan in global trade, especially with Russia, the Middle East, and Africa. The digital yuan, CBDC, could further reduce dependency on the US financial system. The Shanghai Cooperation Organization, SCO, and BRICS are exploring payment systems independent of SWIFT, further weakening Western financial dominance. Real estate crisis. China's property market, once a key driver of growth, is in trouble. Evergrande and Country Gardens collapse have exposed deep flaws in China's debt-driven expansion model. Local governments, heavily reliant on land sales, are facing revenue shortfalls, threatening public services and social stability. Tech and supply chain resilience. Facing US sanctions on semiconductor technology, China is ramping up domestic production and forging stronger ties with allies to counter Western restrictions. Meanwhile, Beijing is investing heavily in AI, renewable energy, and biotech to drive the next phase of economic growth and reduce dependence on Western technology. Belt and Road Strategy. China is expanding its economic influence through infrastructure projects, though debt concerns among recipient nations are growing. Some nations, struggling with unsustainable debts to China, are renegotiating loan terms or seeking IMF assistance, which complicates Beijing's ambitions. Russia has strategically repositioned itself as a key player in global energy markets while navigating Western sanctions. Oil and gas realignment. After European buyers reduced reliance on Russian energy, Moscow pivoted to China, India, and the Middle East. The ruble-yuan trade has surged, undermining the petrodollar. Russian oil is increasingly being traded at a discount, ensuring cash flow but reducing long-term profitability. Sanctions resistance. Despite heavy Western sanctions, Russia's economy has remained surprisingly stable, thanks to strong trade with China and India and a shift towards self-sufficiency in key sectors. The use of cryptocurrency and alternative financial networks has also helped Russia bypass some restrictions, though risks remain. Geopolitical strategy. Russia's war in Ukraine remains a major geopolitical flashpoint. The economic strain of prolonged conflict is real, but so is the Kremlin's ability to sustain it through alternative financial networks. A prolonged conflict risks further isolation but could also push Russia to strengthen ties with non-Western nations, reshaping alliances. Beyond the US, China, and Russia, the rest of the world is responding in different ways. Rise of BRICS and alternative financial systems. BRICS nations, Brazil, Russia, India, China, and South Africa, are challenging Western financial dominance. The creation of alternative payment systems and trade networks is accelerating. BRICS is even considering a common currency, though implementation remains uncertain due to economic disparities between member states. Middle East and Africa's role. Gulf nations like Saudi Arabia are diversifying away from the petrodollar. African nations are leaning toward China for infrastructure and trade, reducing Western influence. Meanwhile, Turkey and Iran are increasing regional influence by fostering stronger economic and military ties with emerging powers. Europe's economic woes, high energy costs, slow growth, and political instability make Europe a weaker player in global finance. Germany, the EU's economic powerhouse, is struggling with deindustrialization and labor shortages. The EU's Green Deal policies are adding costs to businesses, impacting competitiveness in the global market. Latin America's shift. Countries like Brazil and Argentina are increasingly engaging in trade with China and Russia, signaling a shift away from traditional Western economic structures. Discussions of a regional digital currency are gaining momentum, aiming to reduce dependency on the US dollar in cross-border trade. We are witnessing the early stages of a major financial transformation. The US remains dominant but faces growing challenges. China is making bold moves but grapples with internal instability. Russia is proving resilient but remains economically isolated. Meanwhile, the rest of the world is looking for alternatives to Western-dominated finance. How this all plays out will shape global power for decades. One thing is certain: change is coming, and the financial order of tomorrow may look very different from today. The question remains: will we see a gradual transition or a disruptive financial reset? Only time will tell.